So extreme volatility continued in global stock markets on Friday. Asian shares ended the day sharply lower. Europe followed suit when markets here opened, but later comments from New York Federal Reserve President John Williams changed all that. He suggested the US central bank could cut rates again in December, and investors jumped on that and pushed AI stocks higher again. Okay, first let's take a look at how European stock markets ended the day. The Stock 600 slid for another day as those fresh AI fears hit sentiment. The Europe-wide index closing out Friday around 0.5% lower, down 2.25% on the week. In London, the FTSE 100 reversed early losses on the back of hopes for lower US interest rates. The blue chip index finished basically flat on the day, but down 1.8% on the week. And in Frankfurt, the DAX just shy of 1% lower on the day and 3.25% on the week. The index is now significantly lower than its record high in early October. And this is the picture on Wall Street. After a dramatic 5 days of gains and reversals that you can see here, the S&P 500 is currently slightly up, around 0.2%. Wall Street getting a boost before the open by those comments from the New York Fed president. The Dow Jones faring slightly better. It's up around 0.5 percentage point. Investors hoping easier monetary policy, a lending rate cut, will revive a sluggish economy and justify historically high stock valuations. But continued worries about Nvidia erased an earlier bounce on the tech-heavy Nasdaq. It's down around 0.2%. Analysts say the company is the lightning rod for the market's tech anxiety, given it makes much of the hardware that runs large language models such as Claude and ChatGPT. Well, Fiona Cincotta is an analyst at City Index. She joins us now. Fiona, please make it make sense for me. What's going on?
I'd love to be able to. But you know what? I think there are quite a lot of factors at play here. So on the one hand, we've got the AI worries over stretched valuations. Even though we saw those really encouraging numbers from Nvidia, their earnings beat expectations, their forecast beat expectations, there was a lot to like. But the fact that it wasn't able to sustain a move higher does suggest that the market is still nervous about the AI trade, about it being slightly overvalued. I think the results do actually support the AI narrative, but I think what the question here is more to do with sort of the near-term monetization implications and whether spending is just a little bit too high.
Yeah, it's an interesting one because despite Nvidia results, those fears about an AI bubble just crept back in really quite quickly. Are we going to see those fears continue until the big investors start seeing bang for their buck?
Well, I mean, that's a good question. When will this stop? And I think, you know, what's interesting is I do consider that the market is still acting rationally, which is quite important. So it's questioning, you know, when are we going to see the returns? Is this spending too high? And that all relates back to a rational market behavior, which isn't necessarily worrying. And, you know, especially when we think about the extent of the rally that we have seen over the past year, particularly, but even going back further than that, it's been a really strong rally. So the fact that we are seeing some pullback, some drawdown, I think just suggests that the market also is a little bit exhausted from this trade. So I don't think it's necessarily, you know, very, very concerning, but I think there is reason to be cautious, and that's not a bad thing.
Do you see any parallels with the dot-com bubble of the early 2000s? They were right, but it was too soon, and a lot of people lost a lot of money.
Yeah, it's difficult because often with bubbles, you don't necessarily know you're in one until it's too late. But I think, as I said, you know, the fact that the market does appear to be acting rationally, we have had even Federal Reserve Chair Jerome Powell suggest that maybe things are a little bit overvalued, but also that there are companies here that are making money. So it's not necessarily a direct relation, I think, to the dot-com bubble in that respect. But as I said, you know, reason to be cautious. Yes, that's not a bad thing, but not necessarily definitely in a bubble.
And where are we on another rate cut in the US? The jobs data suggesting, you know, I mean, again, a lot going on there.
That's right. You know, there seems to be very sort of choppy changing sentiment as far as expectations surrounding the next Fed rate cut. We had the minutes from the October Federal Reserve interest rate decision a little bit earlier in the week, and they were a little bit more hawkish, suggesting that policymakers may be more cautious about cutting rates in December. And then we had that jobs data, which presented a mixed picture. You know, 119,000 jobs created, but higher unemployment. So I think, you know, that sent, together with the FOMC minutes, that sent rate expectation cuts down to around 27%. However, they've jumped higher today, and that was on comments from Governor Williams, who has suggested that there could still be room for a cut. So, you know, the fact that we're seeing these very skittish moves does suggest that this is quite a nervous market, though, that's very focused on what the Fed will be doing.
Yeah, absolutely. Thanks so much for being a clear voice of reason, Fiona Cincotta, analyst at Citi Index.